Mr. Man, I have diabetes, I have blood pressure, I was in an accident.
Relax. I have a solution. When Raman is there, no fear. What I'll do is, don't declare all these. What is all of this, huh? All of these problems we will not declare, and your premium will reduce and affordable. Are you happy?
Yeah, this is fine.
Huh? This is fine. So all you have to do is sign over here. I'll start the process.
Yes,
Wait.
But
Sir, why are you getting involved? Sir, it's his health, sir. Don't declare it, premium ho jayega, sir. Guys, something went wrong over here and I think the entire industry is messed up. So today, we have Shrihit.
And in true de-influencing style, we'll talk about the good, the bad, the ugly, and everything in between that you need to know about buying health insurance, because these guys won't tell you all of this. So let's get started.
We all know about health insurance, right? And we think we pay certain premium and after that we get all the money back if we go to the hospital. But what you don't know is that you're paying a premium for say 10 lakh cover, but with these simple tricks, this 10 lakh can become 50 lakh. And you're probably not covered for all these things over here, which will also be covered. So we'll get the lowest premium and maximum benefit. Let's start with trick number 1. The health insurance industry is being disrupted by new kinds of companies, and these companies offer direct to customer plans where you get the lowest premium. So because there is no middleman, आपका premium actually कम है. Isn't that amazing? They also offer the lowest waiting periods on anything of the ailments, giving you definitely a lot of benefit. And third, these companies offer everything digitally. So with the power of technology, you have the entire insurance agent in your hand and you have all the power because, tech. And tech is amazing.
Pratik, here's the thing, right? Lowest premiums don't always make the most sense, because sometimes what tends to happen is insurance companies will price their premiums at rock bottom prices and then sell the plan to a bunch of people and then realize that it's not sustainable for them to actually run this way. So at some point when they figure that they're losing more money than they're making, they will automatically wake up one day and say, listen, I have to change your premium structure completely, which means now instead of paying 10,000 in premiums, overnight you may be asked to pay 25,000 in premiums, which means that then you have to find a different provider. And if you can't find a different provider, then you're essentially screwed.
No, but this is not possible. No, once I've got a premium, I've signed a contract, it's locked. How can they change the premium?
It's not actually locked. With health insurance, premiums keep changing every year. It could change because of inflation. It could change because the insurance is currently running into a loss. Also, it could change because of age bands, because you've grown older. So it's not like life insurance at all, where you get a fixed premium throughout your tenure. Here, the premium keeps changing every year, and sometimes it can come as a bit of a surprise.
But Shrihit, low waiting period to hoga. I mean, I don't have to wait as long.
Yes, but then again, if they're promising low or zero waiting periods, there could also be another catch, wherein even if you have the mildest disease, the insurance company may simply reject the application and ask you to go to a different insurer. So it doesn't always mean that low waiting periods means application guaranteed.
So, okay, fine. I don't think this is that important. So let's move to trick number 2, which is, when you go to a hospital and you get hospitalized, the insurance will cover that cost. But what if you just visit a doctor, which is OPD, outpatient services? Over here, the cost is borne by your wallet. So if you get a plan which covers this, you have no issues. An insurance company can actually cover you visiting a doctor. Isn't that amazing? There's also maternity. So you are married and you might have a kid. Uska kharcha to easily will be 1 lakh, could be 2 lakhs also. The insurance provider will cover that as well. So look at these 2 plans over here that I have for you, covering...
No. I understand that OPD plans and maternity plans look like great on paper, because if you are married and you're planning on having kids, to kharcha to hoga, and OPD to is something that everybody visits, right? Everybody visits a doctor. But there is a catch. The first catch is that OPD expenses aren't like hospitalization expenses. Just because you have a 10 lakh cover doesn't mean you'll get 10 lakh for OPD expenses also, because insurance companies and their policies will cap the expenses to a certain limit. Usually it will be around 5 to 10,000, and even if they provide a cap that is higher, then insurance companies will simply increase their premiums by the same amount. So if you get a regular plan for 10,000, you'll get a plan with OPD for 15,000 with a 5,000 ka OPD expense. Also, maternity expenses, while it is a great benefit to have, also come with some caveats. For one, it is slightly more expensive than regular plans. And also, you have to be enrolled in a family floater plan with a spouse, and you have to wait for 3 to 4 years before most insurance companies will even pay out the claim, which means you have to do some meticulous family planning before you make it.
Shreet is very negative person, yaar. I don't think this is true. But I have another trick up my sleeve. Trick number 3. Now, guys, look. Your job is to find a great company or startup providing you the best healthcare. Clear this up in the interview, because healthcare cover is very important in today's day and age. And the healthcare will cover, like you said, you can't say galat bol raha hu, maternity. It will cover all these other benefits as well. So you will actually save insurance. All my friends have a separate insurance cover for health. No need. I work in such a good company. It gives me all the benefits. So here, if you multiply this by 10 years, look how much savings you are doing.
Pratik, there is a catch. Most corporate plans also come with limits. For instance, they may say we'll only cover you up to 5 lakhs and not 10 or 15 or 20 lakhs, the amount that you may actually need, including your family members. Also, there's another problem. See, corporate plans only work until you are with the corporate. So if you choose to quit, or unfortunately you're contracted with a critical illness and you have to leave work, then ultimately you won't have a policy and you can't buy a new policy either, because at that point in time, insurance companies will reject you because you're a high-risk individual, unfortunately. So you won't have cover and you won't be able to pay for those expenses. So it actually makes sense to have a retail plan just in case that your corporate plan doesn't go through in these rare events.
Actually, Shreet, I know that we should all have insurance. I just, thoda mix up, thoda. It's fine. So here is trick number 4. Okay, very simple. When you're buying an insurance plan, you have to make sure that this 10 lakh insurance can actually become 50 lakhs. Let me explain how. First, you get some kind of benefit, right? The first benefit is called unlimited restoration. Now imagine your sum assured is 10 lakhs. 5 lakhs you've covered and you've taken the claim and you've spent it. It goes back to 10 lakh rupees. Then again you go, again you take a claim, again you spend say 6 lakhs, again it goes back to 10 lakhs. So ये restore होता रहता है. Right? This is pretty amazing. There's also another benefit, and that benefit is called no claim bonus. Suppose you did not use it, so unlimited restoration हुआ नहीं. So what will happen is next year, because you didn't take a claim, that 10 lakhs will become 15, and that 15 will become 20, and 20 will become 37, 37 will become 50, and you just make.
Pratik, yaar, what are you saying? Oh, look, features are important in a plan. Just say unlimited restoration, no claim bonus. It makes sense to have it, but the first thing you have to make sure is the insurer will first pass your claim, even if it's for 1 or 2 lakhs. More often than not, what happens is once the claim goes beyond 1 or 2 lakhs, immediately the insurer will say, "Ki there is a problem. Actually, I'm not going to pay the claim because there is a reasonable and customary clause." Now, what is the reasonable and customary clause? Well, they'll say you something like this. They'll tell you that I will only pay for expenses that are deemed reasonable and customary according to me. So if your doctor bills you for 80,000 and the insurance company doesn't think it's a fair price, then they will not even pay your claims. Forget about restoration.
How do they decide 80,000 is fair or not? I mean, this is not at their discretion.
They don't have to decide. They wrote it in the contract and they'll say, yeah, you signed it, and they'll say simply कि हाँ मतलब no, go fight it, fight your cause.
हाँ ठीक है, fight कर लेंगे case. Yeah, what is? क्या problem? So this brings us to trick number 5, and I'm sure आप इसमें कोई problem नहीं निकाल पाओगे, Shreet. Where are you from?
I'm actually from Mangalore, but I currently stay in Bangalore.
And your Aadhaar says what?
I'm actually from Mangalore because the address is from Mangalore.
I already knew this, guys. So there are different zones divided by insurance companies throughout the country. Certain zones actually demand a lesser premium and certain zones are higher premium. Did you know that? So Mangalore will be actually cheaper. So what you can do is take your Aadhaar card, show it to the insurance provider, and you will have a difference of premium because you're from Mangalore. and you'll save money.
Pratik, I knew this actually. The problem with that argument, however, is that once you make sure you tell the insurer that you're from Mangalore, then they'll expect you to make a claim in Mangalore. Accidentally, if you travel somewhere in India, once a claim happens in, say, Ahmedabad or Delhi, maybe they'll pass a claim, but then again, it's at their discretion. However, consistently, if you're making claims in Bangalore, because I'm residing in Bangalore, then the insurance company will most likely ask me to co-pay a part of the bill, which means if my bill adds up to 1 lakh, they'll say 20,000 you pay out of pocket because you're technically kind of cheating me since you're from Bangalore, and then you're availing services in Bangalore where prices of hospital providers are generally higher. So, Pratik, do you have any more tricks up your sleeve?
No, I don't. But what I do have is a checklist which both Shrihit and I will talk about. The first checklist to choose an insurance provider is looking at the network hospital. Now, this is simply a list of hospitals covered by the insurance provider, which is in a cashless facility. So, it's a good practice for you to actually figure out whether that list contains the hospital you frequent. And then there's room rent restrictions. Now, when you read the policy document, it will say single AC private room. Sounds amazing, but it may not be a good thing. What you want is this should say no room rent restrictions.
And finally, speaking of how to pick between insurers, make sure that you check out the claim settlement ratio. A number above 90% is generally good when it comes to health insurance, and things like volume of complaints, because more complaints often means more trouble. However, make sure you differentiate between a general insurance company and a standalone health insurance company, because a standalone health insurance company only does health insurance, which means that they will see a higher volume of complaints because of the kind of business that they do. Whereas a general insurance company will do motor, will do travel, will do health, and so their volume of complaints may not be as high because the line of business does not invite as many complaints. So you have to make that distinction. And finally, always look at the track record of an insurer. Just because an insurer posted great claim settlement numbers for 1 year doesn't mean that they did it historically as well. So it's generally a good practice to look at the claim settlement numbers and other ratios for at least 2 or 3 years before you make a decision. And generally speaking, a longer track record often makes more sense because you want your insurer to stick around when you eventually make a claim.
You can find a lot of this information on the insurer's website itself and the IRDA's website too. We've put in links in the description, so do check it out. And finally, insurance is one of those things where you actually need some sort of help to actually do this. Now, these were just some of the nuances. Imagine that 40-page contract. There's an if and but after every sentence. You need someone on your side, a consultant or an advisor who can fight for you, because that contract is designed so the insurer doesn't have to pay money out to you. And for this, a middleman actually really helps. So not just any middleman, ideally you should have an advisor. And Shrihit has flown all the way from Bangalore over here to the studio because he really does a good job in understanding how the insurance market works. So I think you should check out Ditto, go over there, book a free consultation with an advisor and just understand the nuances of this. So if you thought this was useful, give a like and subscribe, and see you in the next episode. Oh, I'm breaking character.
No, the catch is very simple.
Oh, Pratik ne bhara hi nahi hai wo.
I will give you a use case. It's a very...
There's also another benefit, and that benefit is called
no claim bonus.
And that मैं सच्ची बोल रहा था, क्या गलत है इसमें?